Let us pray. Guide us, Lord, in all our doings with your gracious favor, and further us with your continual help, that in all our works begun, continued, and ended in you, we may glorify your holy name, and by your mercy attain everlasting life, through Jesus Christ, our Lord. O Lord our God, who art the lover of justice and truth, give thy grace to our Parliament and to all who direct the affairs of our nation, and guide them by thy Holy Spirit. We beseech thee that by word and deed they may promote the well-being of this people and set forward peace among all men, through Jesus Christ our Lord. Amen. Let us together say the Lord's Prayer. Our Father, who art in heaven, hallowed be thy name. Thy kingdom come. Thy will be done on earth as it is in heaven. Give us this day our daily bread, and forgive us our trespasses, as we forgive them that trespass against us. And lead us not into temptation, but deliver us from evil. For thine is the kingdom, the power, and the glory, forever and ever. Amen. And now may the grace of our Lord Jesus Christ and the fellowship of the Holy Spirit be with us all now and forevermore. Amen.
The Senate is in session. I have an apology for absence from Senator Moore.
Presentation of petitions. Presentation of papers. Report from select committees. Questions to ministers. Request for leave to move the adjournment of the Senate on matters of urgent public importance. Statements by ministers or parliamentary secretaries. Personal explanations. Motions related to business or sitting of the Senate and moved by a minister. Introduction of bills.
Mr. President, I beg that standing order 45 to be suspended for the remainder of today's sitting. It is necessary.
Not necessary. Public business.
Public business is of the order of the day.
Order number three, sir.
Order number 3.
Order number 3, sir, in the name of the Honourable Leader of the Senate, to resume the debate on the second reading of the Fair Credit Reporting Bill 2021.
Senator Driggs.
Thank you, Mr. President. Sir, given that we've had some time now to peruse the bill, this Fair Credit Reporting Bill 2021, there has been discussion both in the lower house and in the public domain about the bill and some of its advantages, disadvantages. And in preparing for the debate, I thought about how I could contribute in a meaningful way to the discussion. And in doing so, it made me really think about, what it is the bill is trying to do, what it's trying to address, and then also who would be impacted by the bill. Sir, there is a set of individuals who, although they are covered in the bill as it relates to those seeking credit and giving them a regularized credit score, it also made me question, how is the average person treated within our financial system? Mr. President, there are some informal norms and customs in our society that when we think about how we do business and how we interact with the financial system, there are some power dynamics that are at play. And those power dynamics also influence, Mr. President, who gets scrutinized and who is not. Sir, those with the least amount of power, the least amount of resources, are the ones that are graded, scrutinized, penalized, and oftentimes denied access to credit, while those who do have the resources, who do have the influence of power, are the ones who have very little oversight on their business. Sir, and given that banks and many financial lending agencies are perceived as powerful organizations in our economies, how we police them and have oversight over them is very different from those people who don't have resources. We've heard often the saying, some banks are just too big to fail, Mr. President. And we have to be very cognizant sometimes of the measures that we put in place to either address the power imbalance or to counteract it. Because if we look back at the 2008 financial crisis, which eventually led to what we call the Great Recession, it was because banks were lending at very cheap credit rates, and there were very lax lending standards that essentially fueled what was called the housing bubble, Mr. President. And when that bubble burst, it had a ripple effect on the entire global economic system. And many were left wondering, where was the regulatory environment to shield the average individual from the predatory lending that existed in the banking sector? And what eventually happened, sir, is that the system imploded. And we know that small countries like Barbados were then affected to the point where many years later we still had not recovered. And so you might want to know why I'm mentioning this and why my opening remarks are referring to things like power imbalances in the financial system. Sir, because those inherent systems that exist, they are the ones that get to decide who's eligible for credit. Mr. President, what happens when those persons who hold the resources, who hold the power, abuse them and they become predatory in their lending practices? Because, Mr. President, there are few and far in between rating scores for financial companies. So if the ones who have the most to gain and who have the ability to abuse their power within a system, wasn't it that along with bills such as the one we have today before the House, wasn't it more emphasis, and this is not just in Barbados, but globally, why is more emphasis not paid to ensuring that we have a rating or some kind of score for financial agencies so that persons know who are the ones with ethical practices, Mr. President? Because we have at the moment a system that there's very little accountability on the side of the lending institutions as it relates to the individuals seeking credit to assess the credit practices of that institution. But yet, on the flip side, we have before the House a bill that will allow those said agencies to make a financial decision that could affect the livelihoods of those persons seeking credit. Sir, when we look at the financial system, it has come a very long way. And some even argue that it has lost its purpose. The financial system was essentially, it came into being to be a tool to create value for the real economy, for the production of goods and services. Now, what we have is a financial system that you could say that it is a law unto itself, and that is the global financial system that I'm talking about. And what has happened is we have a financial system that is serving the interests of shareholders using other people's money. And here in Barbados, we know that based on some work that has been done in terms of investigating what is happening in the financial sector, many of the banking institutions, the financial institutions, are making profits just from fees. It is not that they're offering services that redound to the benefit of the real economy, which is the production of goods and services, but they're actually making money just from administrative fees. And then, in return, giving very little to those who have deposits within their system. Sir, there are some banks that offer credit to persons, whether it's by way of credit cards in particular. Some of the interest rates are up to 23 and 28%. And you have to ask the question, where does the role of the state fall into play when we are looking at protecting individuals from what is known as predatory lending? Because, Mr. President, we cannot have a financial system that is just, that is fair, because we like to throw around those words when it is convenient. But it's in these types of matters when we're talking about the financial viability of the system, Mr. President, we have to ask ourselves, if high interest rates on loans and credit cards on the backdrop of deposits having interest rates of near 0%, if that is a fair system, and is it sustainable, Mr. President? Sir, in our system at the moment, you can get a loan for all types of conspicuous consumption. You can get easy car loans, you can get a loan for vacation, you can get a holiday Christmas loan. You are even pre-approved, Mr. President. But if, on the other side of the coin, I say to a banking institution or a lending institution, because it's not only banks now that lend, I want to set up an export business. The amount of red tape that goes into probably giving me the same amount of money, let's say it's about $30,000 to $40,000, to start the business as seed funding, is extremely difficult. While on the other hand, for the conspicuous consumption, like a car or a shopping spree, I am pre-approved, Mr. President. And we have to find ways by which there is some kind of intervention that we make sure that there's greater utilization of the resources in the banking industry that enhance the real sector in Barbados and not just conspicuous consumption, because what we have at the moment is a credit facility, and I'm talking across the board, a credit facility that is actually facilitating the run on foreign exchange without, in any real terms, adding to the viability of the Barbadian real sector, the real economy, in terms of the goods and services. But, Mr. President, what I will say as well is, if we are going to pass this type of legislation where Barbadians are going to have a credit score, we're going to need to have, I think, an increase in engagement in terms of the financial literacy of Barbadians. Because many times the advertising behind credit the terms and conditions that really outline the payment plan, the payment structure, are the fine print. But you know about the cash back, that is in bold. So what has to happen is we're going to have to really engage the citizens of this country as it relates to financial literacy. Because there are many Barbadians that probably still don't even understand the concept of compound interest. There are many Barbadians who believe that I can get a credit card and I can pay the minimum balance and it's going to be okay. I can clear my credit card by paying the minimum balance. Not realizing that by the time they've paid that minimum balance, let's say over a period of 6 months, there's more interest owed on the credit card than the money that you've used to get the interest. So there's that type of understanding that has to happen across Barbados, because we cannot penalize persons by instituting a credit score when there's clearly a need for greater financial literacy. Because at this moment, I believe there are a lot of young people out there who believe that because they're pre-approved for something, Mr. President, they can afford the payment plan. Because a lot of the times, people don't take in the extra expenditures that they have. They just look at their flat salary, and they say, oh, well, I can afford to have a credit card that has a balance of, I don't know, $5,000. But the disposable income, when you take out all of the other expenses that you have on a monthly basis, when you realize, when you add the interest rate to the amount of money that is owed, you cannot afford the purchases that you're making on the credit card on a monthly basis. And I think that's the kind of example, Mr. President, and the type of education that we're going to have to roll out as it relates to this bill, because I wouldn't want that we're then going to penalize persons who do not have a good understanding of financial literacy, Mr. President. And it is also a case that, along with not understanding, there are some who do understand the implications of not being able to afford certain credit terms. But, and this is another discussion that we'll have to have at some point, is the concept of living within your means. We are in a financial situation where Barbadians, not necessarily by me, but I'll say it now, we really, really have to find a way to make do with what we have. Too many times we have individuals who may be starting a family, they're just two individuals who got married, a husband and wife, and because the bank has approved you for a $500,000 home, 5 bedrooms, 3 bathrooms, and that's in the upper bracket of what you can afford, it doesn't mean that you have to take that loan, Mr. President. There has to be a concept that people know I have to be financially prudent, because a lot of financial strain causes a lot of marriages to come into disrepute. And the bedrock of any community and any society, Mr. President, is the family. So we also see that this implementation of having a good understanding of financial literacy, Mr. President, is not just financial in nature, but it also has social implications, Mr. President. Sir, I also want to make a call for a greater role of the credit unions in Barbados and the facilitation of legislation that allows them to offer more services to Barbadians, because outside of not having a national bank, I think that's the closest that we have in terms of having ownership of a financial institution that can offer better credit terms to Barbadians. They do at the moment, but I think that there's room for expansion as it relates to business development and greater economic opportunities for those in the community. And I'm sure that Senator Holder, if she is speaking, will give us a good contribution as it relates to the involvement of credit unions on the Fair Credit Bill. But, sir, I just really wanted to state that along with this bill, I had to make the call for a greater or an enhanced regulatory environment for the banking industry and the lending industry, because there is a power imbalance that exists, and there needs to be fair and ethical standards within the banking industry, whether it's a code of ethics or some other regulatory instrument that we can hold these companies accountable to. Because we're holding persons, the individual, we're holding them account by passing this legislation here today. Because if you don't have the right credit score, Mr. President, the likelihood of you being denied access to credit is a lot greater after this bill has been passed. So on the other side of that relationship, I am hoping that the government finds it imperative to draft legislation that also calls for fair and ethical lending standards in Barbados. Because, Mr. President, what has to happen in the 21st century, as a lot of things move and shift in this transition period due to COVID, banks now have to become invested in the real sector and driving the real economy, because there is a disconnect at the moment. There is a disconnect at the moment. And we have to promote, we have to reward lending agencies that are going to consciously use the monies that are within their facilities, Mr. President, to create positive social, ecological, and cultural change, and not just rely on profits as their standard for success. Sir, and I think if we look at the banking industry from that perspective, we then realize how far we have to go. This piece of legislation, I believe, does have merit, but I still believe that there is need for legislation that goes even further in regularizing the financial system and the credit offerings that are offered to Barbadians, to ensure that predatory lending is a thing of the past. And also on the other side of it, I am hoping that there's an enhancement of financial literacy to Barbadians. So, Mr. President, with those few words, I'm obliged to you.
Thank you very much, Senator Driggs. Senator Dr. Holder.
Thank you very much, sir. I wish to offer a very short contribution to the debate on this bill, the Fair Credit Reporting Bill. Sir, I will make three very simple points today, following on from Senator Drake's contribution. I promise not to go too far into the issue of the credit unions. I want to occasion, though, my contribution, first of all, looking at what I call the context for the bill. Sir, believe it or not, this process started some time ago. I know that the conversation in the public domain at this time may give one the impression that this is a recent occurrence. No, it is not. This discussion and preparation of the legislative framework for credit bureaus in this country has been discussed, sir, has been in preparations for some time. And the reason is that we are seeking, Mr. President, to improve the financial market here in Barbados. Research continues to show that across the Caribbean, our financial markets are underdeveloped. I believe it was in 2009. It's a bit dated now, but the Inter-American Development Bank did some research on the access to finance in the Caribbean. And in that document, sir, the point was made over and over again that within the region, our financial markets are underdeveloped. The primary point really coming out of that research, Mr. President, suggests that they do not intermediate effectively between savers and investors, and therefore there's much work that we have to do. Factors such as a lack of collateral, poor credit information, and the legal systems, sir, that often favor large enterprises or those with property tend to be the case. And so those that are what I consider to be vulnerable, the micro and the smaller firms and even some consumers tend to be disadvantaged as a result. So it is against that backdrop, Mr. President, that this piece of legislation is being brought to help with regulating the financial market, help with bringing our financial market to a more sophisticated level, if you will, that we are better able to encourage that trade between savers, between investors. And so, as I look at the context of this bill, I want to share, first of all, sir, that there's a school of thought out there that suggests there are key factors why the vulnerable, why our MSMEs, etc., are unable to access credit with the ease that we would like. Sir, I've said time and time again that I don't believe that we have necessarily a problem with availability of financing, but we do have a problem with access to it. Now, I know that there are many speakers, so I'm not going to really delay the chamber to take us back to all of the research, the Global Competitiveness Index that point to access to finance being an issue, the bureaucracy around it, and all of that. No need for that. It's been said time and time again. But it must be underscored that we do have, sir, a challenge with access to finance. And research tends to suggest that there are three key reasons why this is the case. The first one is what is referred to as asymmetric information that oftentimes does not exist. And what do I mean by that, sir? Asymmetric information refers to a situation when one party to a transaction has more information than the other. So clearly, the borrower has more information than the lender. The borrower knows what he or she wants to do with the money. They know really their capacity, if they really can repay, if they want to repay, if they plan on repaying, they have more information than the lender. And this tends, therefore, to put the risk even higher, to increase the risk for the lender. That's one school of thought. The second is what is referred to, sir, as adverse selection. Adverse selection arises between borrowers who are most likely to default and the fact that they tend to be the ones who are more eager to obtain loans. In other words, sir, adverse selection says that those people who tend to default on loans are the ones who tend to be more eager to apply for loans. Now, I'm not so sure, sir, that I necessarily subscribe to this school of thought. This is again, research that has been done to try to suggest why there is this risk aversion to lending. But that is one school of thought. So borrowers can be disadvantaged. Why? Because the financial institutions and the lenders are so constructed and so structured, sir, to assume that persons who tend to be very eager to borrow are the ones who are more likely to default. It is referred to adverse selection. And then thirdly, sir, there is moral hazard. Moral hazard is always a risk in loan transactions. Once borrowers have the proceeds of a loan, it is possible that they will engage in risky or undesirable behavior. This is referred to as moral hazard. Sir, why am I quoting these schools of thought? It is because, sir, of these 3 points. Researchers indicate to us that there is a high level of risk in the financial market, and therefore, in order to mitigate against risk, in order to manage your risk, then there's some things that you have to put in place. There's some things that you have to do so that those who are considered less vulnerable, or more vulnerable, sorry, those who are considered less likely to be able to borrow, that they can actually borrow. Because what happens is that when financial institutions apply, sir, these schools of thought, as we know, it exists right now in the culture in our financial institutions, those who are considered to be good risk, those who have viable projects, you know, those who genuinely want to be able to access financing for a feasible and a credible business idea, they tend to be disadvantaged, sir. And this is the point. This is the point, that they tend to be disadvantaged. So whereas the financial institution may, as a result of this aversion to risk, may be able to protect their depositors and to protect their interests, what happens is that those persons, those borrowers that represent good credit, sir, tend to be disadvantaged. And therefore, it is against this backdrop, Mr. President, that this particular bill, in my view, is important, it's critical at this point in time. Why? Because a bill that regulates credit bureaus in a country helps her in the ability of that country to develop its financial market. It helps to mitigate the risk associated with access to financing and access to credit. It helps her to give the vulnerable the opportunity for a fairer hearing and for the opportunity to access financing and to access credit. And this is why I said, Mr. President, that my first point is looking at the context. It is important for all of us, and even those in the public domain, to have an appreciation for why it is necessary at this point in time, as we're looking to move our financial markets to being more sophisticated, for us to have this piece of legislation at this time. But I go further, Mr. President, I go further. And this is why I said that this has been in discussion for some time. This is not new, sir. The truth is, it's not new. Back in 2016, 2017, sir, I had the pleasure of chairing a committee that worked on a national policy framework for the development of micro, small, and medium enterprises in this country. Sir, it is already a document of the House. It was actually tabled in 2017 in the other place. And sir, we would have done extensive research. We had a wide stakeholder grouping involved in the development of this policy, the first of its kind for Barbados. And we looked, Mr. President, at what it is that we needed to do back then to really make our MSME sector a viable one, put it on a growth path. Obviously, back in 2017, there was no COVID. The truth is that it now has to be relooked and brought now into the current reality. But the vision of the policy at the time, sir, if you would permit me to quote from the policy document, it says that we want for our MSME sector to be a globally competitive, technology-driven sector contributing to the sustainable socio-economic development of Barbados. This was the vision of the policy. Sir, there were 4 pillars in this policy document. And the second one was access to finance. because we know it is the perennial issue affecting MSMEs, access to finance. Sir, within the access to finance pillar, we would have research across the region. CARICOM, I believe, also had put out a model piece of legislation encouraging member states to harmonize their laws and their policies and so on around. And so, in this pillar of access to finance, sir, policy objective 2 said that we want for this policy to be able to help to strengthen the risk mitigation framework to improve the access to finance. In other words, sir, we recognize that there was a problem with access. We know that we have to bring a suite of solutions to the market. We can no longer just rely on seed financing. So we needed to consider crowdfunding. We need to rethink our venture capital solutions, sir. We needed to develop our microfinance institutions. So as the fund access and the trust funding, was introduced under this administration. But the point is that, yes, we understood improving the availability, sir, of the resources for the sector. But we recognized that there were risks associated with lending. And we needed to strengthen that framework to mitigate risk. And so there are a couple of things that we proposed, sir. We proposed, for example, looking at a loan default insurance product that would incentivize lenders to come into the market, investors to come into the market. We also looked, sir, at the introduction of a collateral registry. I know that there's a lot of talk now about the collateral registry. I heard many persons in the other place speak about the collateral registry, but this was talked about back in 2017. We introduced it in this policy document, sir, as a part of our efforts at risk mitigation. And, sir, we also talked in this policy about establishing a comprehensive credit bureau system. So I said that to say that this is not new. The credit bureau was proposed in this document to assist with the risk mitigation framework that I mentioned earlier. Because we understood and recognized that we had to strengthen the market by making it more accessible, affordable even for the vulnerable and so on to be able to access credit. And in order to do so, we have to mitigate against the risk factors. So it was mentioned, Mr. President. It was here, listed as one of the solutions for the sector. So I am therefore pleased, Mr. President, that finally we're able to debate this particular bill now in the House. You see, for financial markets to develop, there must be mechanisms, sir, that mitigate these risks. There must be mechanisms that mitigate these risks. So we want, Mr. President, to have a financial market, as I said, that MSMEs can access with ease. We can strengthen the risk appetite in the marketplace for those that are considered vulnerable in those type of projects. And so, following on from this seminal work done in 2017, sir, the banking community, they were able to have some consultations and collaborate. I believe it was the central bank, and they were able to influence and inform, sir, the legislation that is before us at this point. And in 2019 of July, sir, a bureau was established. And this bureau has 13 entities at present, sir, who use the mechanism. And these 13 entities include 5 commercial banks, 6 credit unions, 2 financial institutions, and it is growing. So from 2019, sir, this has actually been operational. There have been financial institutions using this new mechanism to improve, as I said, the access to financing. Now, before I move on to my second point, this is still my first point. Before I move on to the second point, I wish to underscore, sir, that we've had a credit facility in the past. I know when that facility was launched back in 2019, the proprietor of that earlier facility was in the press saying, "Oh, we didn't need another one," and so on and so forth. I don't quite agree with the proprietor, sir. I believe that competition is in this case is good for the consumer. But the concern that I have with what obtained in the past and listening to small business owners and so on is that there was no way of updating the information, of refreshing the data. So if it is that a proprietor, sir, ran into some trouble 20 years ago with a financial institution, sir, 20 years hence, that information was still captured, it was still documented, it was still recorded. And therefore, that proprietor could very well be disadvantaged in their application to a financial institution. So we must make sure that there is a mechanism to allow for the updating of information. And I saw in here, sir, a time horizon of about 7 years. A time horizon of about 7 years. Because the truth is, I mean, the people all over, I don't care who you are, may very well go through challenges. You may have your problems, unable to service debt and so on. And you don't want that, something that occurred 10 years and 15 years in your past still haunts you in your current situation. So we must have that built in, sir, that allows for the updating of information on individuals. Sir, let me move on to my second point. So that was the context for the bill. And therefore, I support, sir, that at this point in time, we need to have this apparatus in place. The credit bureaus are a permanent feature, sir, of all developed country financial markets and play an invaluable role, as I said, in mitigating risk. And those schools of thought that I mentioned earlier, adverse selection and moral hazard and so on, are easily mitigated, sir, by putting such mechanisms in place. And so my second point now has to do with a few concerns, sir, with the bill itself, that I want to use this occasion before we go into committee to propose that we address and or, sir, consider. So for example, at section 10 of the bill, it speaks to restrictions on transfer of license. Restrictions on the transfer of license. So I understand what is the intent here. And therefore my first question is, should we not also contemplate not only the license itself, but shares? Should we not also consider restriction on the sale of shares in the credit bureau? Because I get the impression from this is that we want to make sure that the central bank, as the regulator, has oversight so as to protect the market. So should this not go further to consider the sale of shares, that there be also a restriction on the sale of shares, especially those who may have, a significant number of shares within the particular bureau. So that's one that I would wish for us to to contemplate. The second one, sir, has to do with the penalty. The penalty that is proposed for the credit bureau that contravenes this act. Sir, it's only $50,000. Sir, I believe it should have been higher. Because any contravention to this act, sir, giving out information illegally on clients, I don't like the words, they're the subject, but giving out information or breaching in any form this particular bill, sir, in my view, is a serious offense. So where we have, for example, at section 28, it says that a credit bureau which discloses data subject information in contravention to this section is guilty of an offense and is liable on summary conviction to a fine of $50,000. So I have seen legislation come before us with heftier fines. Heftier fines, sir. And I believe that if a credit bureau contravenes this act in any form, there should be a much stiffer, as we say in Bajan parlance, a much stiffer penalty than $50,000, Mr. President. And the other two queries, sir, have to do with Section 17 of the bill. Section 17 of the bill, and if I put on my credit union hat now, Section 17 of the bill says that a credit information provider, credit union, shall, upon providing credit to a member or entering into a credit or loan agreement with a member, furnish a credit bureau with information relating to the member. So it says that the credit provider, the credit union, shall. It says shall, sir. But in other sections of the bill, it gives the impression that the credit union, in this case, may. Okay? So it says, for example, shall in this section, but if we go over, sir, to section 22, we see the term may being used. 21.1, a credit information provider may disclose credit information to a credit bureau. It says may, sir, in 21.5, 22.3, etc. So there's several places, and I just want to make sure that there's no ambiguity, there's no misunderstanding in how we interpret the bill. And so, you know, is it a case where that first section that it says shall, should that be considered maybe may instead of shall, so that it is in agreement with the other sections of the bill. And then finally, sir, at section 18 of the bill, section 18.3, it says the information respecting a data subject, don't like the term, but I have to read it, sir, to you. The information respecting a client that a credit information provider shall furnish to a credit bureau includes at H credit information about a data subject's income. About the data subject's income. Now, sir, that, in my view, is a very serious thing. Especially if you're saying that the provider shall do it. So the credit union, for example, has a member who comes for one of our Christmas loans. And the credit union is currently on the network. The credit union is right now a part of this mechanism we have, as I said, in place since 2019. This legislation then is saying that credit union must give information on the income of the individual. Now I look across at my colleague there, who the leader of opposition business, who happens to be a member of the CN Credit Union, and he's a member. He's before the loans officer, and what this is saying is that all of his income information now must be provided in that transaction. Now that is a serious thing. That's going to reveal a lot of what's going on in a particular trade union, you know. But that's the point, sir. The point is that we're saying here at this section that the credit information about a data subject's income. Now I understand, sir, that we're talking about the credit worthiness or history, financial transactions of the member of the client. But I'm wondering, sir, should we also include the income of the individual? So those represent, sir, some of the concerns that I have with the bill. As I said, contextually speaking, we need to have this legislation at this point in time to help mitigate the risk. But I think that we need, sir, to maybe look at a few of these clauses that are here represented. And finally, sir, I want to talk in my third point. This is a final thought, what I call the communication now around the bill. I talk about the context of the bill, the concerns, a few concerns that I have relative to the bill. I want to talk now about the communication around the bill. Sir, I do not understand. Why is it, Mr. President, that some of the comments that I've heard espoused by people around this bill, sir, have been shared? I even heard one voice note, someone sent me a voice note of an individual associating the bill with a conspiracy theory. And sir, I you know, I listened to it, and I said to myself, sir, this is really an unfortunate development. Because as I began my presentation this morning, making the point, it's not new. It didn't start yesterday. Actually, the draft bill was in place since 2019, right? And being discussed with key stakeholders. So this is not new. But to hear that, sir, this person, you know, sending around this note, and I suspect that there are many who've heard it that may even easily believe it, sir. That gave me pause, I must admit. It gave me pause. It said to me that there's something wrong, sir, right now in our country, where there's this clandestine description to most things that are happening relative to governance and government in this country. Something is fundamentally wrong with that, sir. And I asked myself, maybe as Sir Lloyd asked some time ago, how did we get here? I asked myself, how did we get here? If we can borrow that phrase from him, how did we get here? How did we get to this point, sir? Where improvements to, in this case, the financial market. Matter of fact, one very well-known banker in preparing this research said to me, much ado about nothing. Those were her words, much ado about nothing. Because she couldn't understand the conversation going on around the bill. And it said to me, sir, in my final thought, it said to me then that we have maybe to do a little better with our communication. There are those, sir, that you will not win over, you will not convert. We know of even Jesus Christ himself could not perform miracles in certain places because the people had no faith, and that was the Son of God who was able to walk on water. So we know that there are those that you will not ever be able to convert, sir. We also know that as you understand the politics of the day, you go into your silly seasons, you know what will happen as a result of that. But there's still the majority now, the majority of our public, sir, that we have to do a lot more to reach and to communicate, not dismiss everything they say, not dismiss all their comments in their commentary. Because they have a right as a citizen to question their government and to comment on the management of the nation's affairs. But I'm feeling, sir, that we have to do a lot better at how we communicate. As I said, the fact remains that consultations have been going on. They tell me since 2017. This bill was in draft since 2019, and yet it is on the order paper in the last week or so, and creating a lot of concern. Now, sir, I know that Barbados, like any other place, we are influenced a lot by what happens in North America. Matter of fact, we are glued to our televisions and radios and so on, and we are influenced, trust me, by a lot of the communication that comes from there, good or bad. And we know of the conspiracy theories and all that. You see it on a particular station, you hear it wherever you go. So we are battling that, sir. We are fighting against that, and therefore we have to make sure that we communicate better. We have to. We cannot dismiss the concerns, yes, of our citizens on matters of governing, but we have to and must do better. And as I conclude, sir, I want to draw from Hunter Thomas's statement. He says, we cannot expect people to have respect for law and order until we teach respect to those we have entrusted to make those laws. I'm obliged to you, sir.
Thank you very much, Senator Dr. Holder. Before we take the next speaker further to announcements, I received word that Senator Maynard will be absent today, and Senator State and Boyce have indicated that they will be late. Senator Dr. Springer.
Thank you, Mr. President, for the opportunity to speak and to add my voice in support of this bill. Mr. President, societies all over the world have evolved from agrarian to industrial and to information societies. And today we live in an information society where the creation of content, distribution, and manipulation of information has become one of the most significant components of the fabric of modern financial systems, as well as economic, as well as social and cultural activities. As a result, we are seeing more and more incorporation of information technology and other compatible technologies into different aspects of our life and our day-to-day experience. This bill, Mr. President, aims to steer us towards this direction, but with a view of adding a number of benefits to Barbadians, especially poor working class Barbadians. I will look at some of those benefits as I go further into my presentation, Mr. President. In short, this bill makes it easier for poor people, for black people, to obtain credit, to borrow money, by creating a mechanism for persons who would not ordinarily have access to that credit, Mr. President. And this is done through the creation of the legislative and regulatory framework that promotes the development of a fair credit reporting system, which in essence will ensure that persons and entities that are subjects, as is referred to in the bill, have adequate information to assess credit risk, thereby making it easier for these persons to provide the banks and other credit providers with the relevant information that they would need when assessing these persons when they approached them. Mr. President, the pandemic has resulted in several people losing their livelihood over the past 2 years, and in many cases, what little savings they had on the bank, they also lost. And this ordinarily would have had a deleterious effect on that person's ability to obtain credit. When a person has no money, has no savings, really and truly, their chances of obtaining credit in any financial institution here in Barbados is slim. It's very slim. But with this bill and the formation of the credit bureau, your credit history can be leveraged, Mr. President, to help you not only obtain credit, but may also help you to qualify for credit at much better terms. And the reality is that for many of us poor black people in this country, the only way that we are going to get back on our feet in a post-pandemic Barbados is through credit. For many of us, black people, poor people. In fact, I would argue, Mr. President, that second to the trust loan, and I have a particular experience with the trust loans and appreciation for what government has done. But I would argue that second to the trust loans, this is perhaps one of the better examples of a government doing all that it can to ensure that poor people are empowered with the necessary resources that they would need to help build up their own personal economic situation or condition. And I would digress a little bit because just yesterday I had the opportunity to engage with some young men who were the beneficiaries of a trust loan just recently. And these were persons who were on the block. In some cases weren't doing much, but they were able to use that finance, that loan that they would not have gotten in any bank in this country to help build out a small business there in their communities that would not only benefit them personally, financially, but would, especially this time of year, would benefit the entire community. And I would want to commend the government for that at this point in time, because that, believe me, is one of the most transformational, especially at the local level, at the individual level, pieces of legislation or a policy that I've seen coming from this government. And this one, Mr. President, I think can somehow be compared to that in the sense of what it allows the small person, the small businessman, the individual, the housewife, the single parent, what it allows that person to have access to in terms of credit. Mr. President, credit bureaus play an important role in the economic growth and stability of any country. They host a wealth of information that helps creditors and credit providers to be more responsible in spending and lending and in lending practices. but there are a number of direct benefits that can accrue to the individual. For example, this kind of broad-based credit reporting system gives poor people an opportunity to demonstrate their credit worthiness. It provides a platform for them to show their history of good credit. And this is especially important after a person would have experienced a adverse credit condition situation where they ended up with bad credit. And there are a number of reasons why a person who otherwise would end up with bad credit. Especially this time of year, Mr. President, we all have family members and friends. You know, sometimes that friend might be a female girlfriend who, for some reason, they might have had a history of bad credit with these stories, and they may ask you as a friend or a family member to assist them in purchasing an item. And that person may have every intention at the time when they ask to pay the monthly installments, they pay the bill. And they genuinely meant that. And we've all done it, Mr. President, not we've all, but many of us have done it, where we assist a friend who would have asked you to take out something in your
Senator,
name.
I believe that the honourable members want me to urge you to speak for yourself.
No, what we have all done, Mr. President, is that we have put ourselves out there for our family and for our friends.
Agreed.
That's the point I was trying to make. All right?
Continue, Senator.
We have all put ourselves out there at
all
some
in the
point
spirit of the season.
for our friends and family. It's something that we do. Many cases we do it for love.
Indeed, sir.
A lot of people are walking about this country today because with bad credit because of love. All right? The reality, Mr. President, is that in many cases, persons during the good times and at the point where they said they intend to pay but don't pay.
That's right.
And as a result, the person finds themselves default. And even without even knowing, it may result in bad credit. Many people have bad credit because they trusted somebody else to pay for them. What this bill does, Mr. President, you can now use your other, because even though they would have made a mistake to trust that person, that individual might have been paying their light bill, their phone bill, their water bill, all the utility bills, internet bill, and even the other loans that they may have, paid them on time. And they can use that now, that history can now be drawn on, taken into consideration to help to counter that adverse report that might have resulted from trusting or placing your misplaced trust, Mr. President. So that's just an example of where a small man, an individual, could find themselves in trouble, and then under this legislation can have some form of recourse where in the past they would not necessarily would have had that recourse, at least not in quick time, because sometimes these things drag on for years and they haunt you for years after the deed has been done. You're still struggling to improve your credit rating. Mr. President, this bill also provides for all involved a more transparent system for persons to have their credit scores or their credit rating assessed via more objective and transparent matrix. In the sense that there's a set form of rules that one can use to gauge a person's credit worthiness. And when one looks in the bill, look at the individual level at section 27, it speaks to the data subject's rights to access and the correction of information. This is good in the sense that you can now go in, and if you see something in the report that they are obligated to send you on a yearly basis, But that is something new that dissolves that. This, under this legislation we will see. Because for persons, you will not know your credit rating until you go to try to get a loan or try to get credit. Then you discover that you might have had poor credit. But now you're obligated to send you a report. So you know before you go in what your credit rating, what your credit score is. Now, you see on TV sometimes persons, before they do anything, they go on the app and they look and say, my credit score is blah, blah, blah. So I know you can buy this car, or I know you can't buy this car. So we're going to have that kind of information at hand. But what is important, Mr. President, is that you can challenge information that you deem to be incorrect. I don't know if that existed before, because I've never heard of a situation where persons could go in and challenge with any positive results information that is on their credit score. You can challenge it. You can challenge in writing. You can have it change if you don't agree that it is correct. Another important aspect that I think would benefit persons is your ability to also challenge your disqualification for a loan. Oftentimes we go into banks for loans, or we go into credit unions for loans, or we go to stores to purchase things, higher purchase, and we are declined, we are refused, we are disqualified, and all we can do is just walk out feeling depressed and feeling down. That's all we could do in the past. There was no recourse ready to challenge a bank or challenge any lending institution certainly for poor people to give you a loan. That never really existed. It never existed. People never really knew anything about it. But now it's here and clear writing that one can challenge the disqualification for credit. And I'm sure that is something that many persons would see great value in. Mr. President, with the formation of these credit bureaus, there are certain aspects of our spending behavior, and I think Senator Drakes would have touched on this, where, for whatever reason, there are many persons who engage in excessive spending, excessive borrowing, go beyond what the capacity of their salary, Mr. President. Happens a lot wrong this time of year. This year, this period of the year is notorious for overspending. I mean, what this one would more be geared towards a certain gender, but there are many of us who, when they're going to, I didn't identify the gender. When you're going, if you can't fix, you can wear it. You're going to, you want every sale you go after, every bargain you see, you want. You know, every discount attracts you. It happens. There are people who have very little resources, but they are attracted to sales and bargains and discounts. And these persons that I'm referring to, and some of the language, pay nothing down until January or something like that. You know, and you see that, you know, there's no money spending, so you go and you take up what you want. You take up what you see. And come January, come 60 days later, you find yourself in a situation where you can't afford to pay. You can't afford. And the other institution that even know that even though you can't afford to pay, will still give you more credit. Yes. Predatory lending that you refer to. It's madness. You can see it with the credit cards. But this legislation, Mr. President, it forces persons to be a bit more prudent, more responsible in their spending, in their obtaining of credit. Because what it does, because it monitors your credit, then there's a mechanism there to prevent persons from allowing you to overspending that certain percentage of what your salary can carry. So these are important safeguards that would assist some of us who may have a weakness in that regard. And let me just go a little broader into area where I am quoting the words. God, I dealt with the individual, I dealt with the small business person, because what I said about the individual can always be scaled up to refer to the small business person, the medium-sized business person, because they make some of the same errors, some of the same missteps in terms of credit, obtaining credit that us individual makes, you know, in terms of overextending them and overspending and overborrowing and such like. But according to some economists, this legislation has even added value as it relates to Barbados as a whole, because it may facilitate the improvement in Barbados's own credit score on the World Bank ease of doing business, as well as the global competitive index. Those two, and other influential rankings where credit reporting legislation and broad-based or comprehensive credit bureau coverage are major factors. And these are the words of economists. These are not necessarily my words, but I do endorse them, and I do believe that they have merit. But as I will close, Mr. President, now, as I started by saying that today, credit bureaus are considered essential. They are essential elements in the financial infrastructure of any country, and certainly of this country. And this legislation will steer us in a better direction. I have no doubt that it will produce positive effects for the people, for the financial institutions of this country, and for the economy as a whole of this country. And with those few words, Mr. President, I want to express my support for this bill. And I want to associate myself with the words of my senator colleagues who would have supported this bill. Mr. President, I'm obliged to you.
Thank you very much, Senator Dr. Sprigger. Senator Wiggins.
Thank you, Mr. President, for giving me the opportunity to speak on this fair reporting credit bill. Mr. President, as far as I am aware, it could be about 20 years ago, I knew of a credit bureau operational in Barbados. And I believe the agency would have had other operations in the Eastern Caribbean. I know of this credit bureau, Mr. President, for a number of reasons, because I used to work in a bank. So I understand in terms of applying for loans and so on before, that many Barbadians were unaware that there were credit checks that were done on them. Because I know there was a time some people applied for loans and they would have left out pertinent information with respect to their liabilities. And the credit officers would say to them, but you have a loan at XYZ Bank. How did you not include that information? But the banking system, as you know, that is regulated by the central bank, they would have had this network in place, sharing of information at that time between the commercial banks. So the commercial banks would have had a credit history on many persons, and this was not to their knowledge. But sir, this new Fair Credit Reporting Bill on the face of it, appear to have similar objectives, I believe, to the Data Protection Act, which relates to the responsibilities of data controllers and data processors. And it sought to ensure clear provisions, sir, for data confidentiality in all sectors in the exchange of information, which, to my mind, would encompass the definition of a credit bureau. The difference here in terms of what's going on is that this fair credit reporting system is a licensing system rather than a registration system. And because of that, it is governed a bit different, even though some of the information more or less relates to the Data Processing Act, but there is some divergence and there's some similarities. And we all have copies of that act, and we can read it through and see the information contained therein. But, Mr. President, I've heard a number of discussions as it relates to this fair credit bill. And as far as I'm aware, there are benefits to the customer. There are lots of benefit to the customer. Because if you want to apply for credit, be it a commercial bank, any other financial institution, credit unions, insurance companies, etc., it is incumbent on the credit provider to inform you, Mr. President, that your information will be shared with the credit bureau. And at that particular point in time, you can determine if you want to go through with the transaction. So you have to be informed upfront, whereas before the activity was more or less covert. You did not know. But now you are fully aware, you are brought into the picture about, so the data subject, the senator doesn't like that term, but that's how it's listed in the act. You know everything now that you need to know. And data subjects under this act, Mr. President, does not only include what I would call the end consumers, which is the regular person. It also includes all financial institutions and anyone who is dispensing credit, including government agencies, state-owned enterprises, Mr. President, will also be regulated under this Fair Credit Reporting Act. And Mr. President, in terms of this bill is monumental to the extent that it goes farther in terms of customers and the information that will be disclosed. You have a situation, one of the things that I'm concerned about in terms of all the information about your family, your friends, and whoever that is being forwarded to the credit bureau, sir, is that there can be accidental breaches. And every time there's a breach, like let's say the Panama Papers, the Paradise Papers, the Pandora Papers, you hear that it was an accidental breach. Now, Barbados is a very small society, and confidentiality, Mr. President, is very important. It's a very, very important plank in which this bill will have. Because, Mr. President, if I go to loan and I have my father, my mother, a friend guarantee the loan for me, they too have to submit their information to the credit bureau. So in fact, it's a lot of data harvesting that will be going on with respect to this credit bureau. And this is why one of the senators spoke to the issue of public education. And I firmly believe that part of the process in terms of the setting up of this bureau, that Barbadians have to be told exactly the outcomes, what happens to their data, how it will be treated, so that they would be comfortable, Mr. President, applying for loans in order to be able to transact their own personal business. So it will have a very great impact on our society, Mr. President. Now, sir, in terms of the regulation of the credit bureaus, this credit bureau that is being set up under this bill, in the bill, it is being regulated by the Central Bank of Barbados. So one of the questions that I really would like to ask is that the Central Bank is already overburdened looking after the economic and developmental aspects of Barbados. I feel in terms of everything that I have read about this bill, sir, that maybe an agency similar to the Financial Services Corporation with the Central Bank still having oversight of this credit bureau should be set up. Unless, of course, you will be setting up a whole new department within the Central Bank, a separate department within the Central Bank to be able to have oversight of this operation, because you are more or less looking at the lifeblood of people's information. And, you know, they have to evaluate applications for people to carry on the business of the Bureau. They have to maintain standards, targets, and guidelines. So I believe an inspection, I know there's a bank inspection, bank supervision section of the Central Bank, but I believe that, well, and maybe I would say, like with everything else in Barbados, a lot is changing. And I believe we have to bring our people along with us. I mean, just over the weekend, and I think I would have seen it on social media, people started being shocked. Well, what I call the automatic number plate recognition, that's what I know it as, where vehicles are being monitored. And Mr. President, these are things that obviously we agree with them because, you know, living in different societies, we get accustomed to them. But I feel that you can't spring the thing suddenly on people, but I will say to you that I support that aspect under the Ministry of Transport and Works, the automatic number plate recognition. I think they call it EVR, but that's how I do it. I using that aspect of it to remember. And it's very good. So I think the Barbadian public need to be educated and, you know, with a lot of things that are being implemented. So the first major task for the regulator would be a licensing process under the proposed bill, because it would be illegal for anyone to set up a credit bureau and not having the relevant licensing from the Central Bank, Mr. President. Existing credit bureaus, like I said, already happen here in Barbados, and they would be allowed under this bill to continue, but they too have to apply for a license, and they're given a 6 months grace period in order, as they say, to get their house in order. So in reviewing the various factors, Mr. President, I want to read this for you, that what must be considered and assessed in the licensing requirements: incorporation and ownership structures, connection with other persons, qualifications, experience, and integrity of proposed directors, financial aspects, the nature of the activity the client seeks to conduct, soundness and feasibility of the business plans, adequacy of systems and arrangements put in place to ensure compliance, and the overall design and flexibility of the data collection mechanisms. And that's why I said to you, Mr. President, that that is a huge task for the central bank to undertake along with its other strategic duties. And that's why I am saying that I do believe that we should have a new agency set up in order to be able to monitor this credit bureau. The central bank, too, in terms of this bill, also can share your information with external sources. I think external sources, because in case they hire personnel or are there or in conjunction with any international development agencies, that your information can be shared with these external providers. And that's the other thing that we have to look at. In terms of one of the other benefits to customers, I know if someone moves in terms of CARICOM from one jurisdiction to another, where there are credit bureaus set up in those various jurisdictions, they can share the information because, say, for example, there are a lot of multinational companies operating in Barbados, large supermarket chains, large banking chains, and so on. And they now, or maybe they were doing it before, but we didn't know, can share your information to Canada, England, Trinidad, Jamaica, where their headquarters are. And this is something that we must be aware that there's a lot of information going around. So I'm saying that if I move from here now to Suriname, because there is a credit bureau in Suriname, and I wanted to have credit there, you know, buy a bed or something, they can share my information with the credit bureau there, and Suriname, as you know, is a CARICOM country. So there are lots of benefits, sir, in terms of this whole this whole new bill that is coming across to us at this time. Now, with respect to the credit unions, and maybe some of the banks, but mostly the credit unions and the small credit unions, with respect to this fair credit reporting bill, they are going to have to increase their ICT capacity. They have to increase their ICT capacity and adopt new procedures and guidelines, because there was a time when people felt, well, the bank's not going to give us a loan, and they will run to the credit union because they felt that the credit unions did not have the same sort of mechanisms in place to do background searches on you in order to get a loan. But today, that will not happen under the credit bureau. So the credit unions now have to bring their operations up to standard, because you cannot operate loose anymore in this new globalized environment. So this Fair Credit Reporting Act, sir, is really bringing Barbados really on board with the international community in terms of everything that we are doing in this country today. And persons must recognize that that's what it's about, not just the government trying to do things behind people's backs and so on. So, Mr. President, I would say to you, I do, in fact, go along with what's happening, because, as I said, what this is laying bare here now is to making people aware that your information was, in fact, harvested before. You didn't know, but bringing this bill before Parliament now educates the public to a certain extent that, yes, your information is out there. It will be, it used to be, and will continue to be shared with other providers, and this is something that you need to know. So, Mr. President, with those few words, I thank you very much for allowing me to speak on this fair reporting credit bill. Thank you, sir.
Thank you, Senator Wiggins. Senator Adams.
Thank you, Mr. President. It strikes me that this debate on this bill takes place against a very uncomfortable economic backdrop. We have a huge amount of public debt, a pandemic going on, and the principal plank of our economy, tourism, is still suffering, although it's showing signs of ticking up. It also seems to me that a bill like this, which presents obvious advantages to banks and credit lenders at a time where banks are not viewed sympathetically by the broader public, and Senator Drake's touched on that with her comments on fees, the amount of profits they're able to derive from fees, that the public has very legitimate concerns around questions as simple as what's in it for me, how does this benefit the country more broadly. I tend to look at this particularly through the prism of the debt and encouraging growth. I'm sure there are a few senators in here who look at the reports that come out of the central bank, and there was one on, I do not remember the formal title, but it's the economic trends January to September, the 9 months to September. And in there, you can see that, like last year, credit extended to the non-financial sector, the kind of borrowers who represent the real economy that Senator Drake spoke about. Well, it shrunk. It shrunk last year, and it's on track to shrink by an even larger margin this year. Now, sir, if we have that kind of shrinkage in credit, which, as Senator Springer talked about, is one of the primary factors that can drive growth, and that's credit to MSMEs, which Senator Holder is a specialist on. Those are the lifeblood of our economy. If we can't increase the flow of credit to that sector or enhance it, it makes getting out of this situation, the financial stress, the mental stress, the personal stress that people feel, that much harder. So I pay quite a lot of attention to the criticisms and concerns, might be a more accurate word, to this bill that I've seen on social media. And there's one that struck me in particular. It doesn't cover everything, but I think it's fair to say the criticisms this person presented, this is a credible person in a generally coherent critique, thought that on the one hand, this bill actually, and this reflects the antipathy towards banks, is just another form of financial repression, that banks are going to take this data and use it to blacklist people and deny them credit. And the other bucket really asks the question, is this kind of regulation required? Is it not superfluous? Why do we actually need it? Are we just going to create more and more red tape around something like credit and getting access to credit? So there are many ways to answer this, but I think I'll deal with the financial repression one first. Are banks going to take this data and actually try to not lend to certain segments of the population? Sir, the fundamental business of banks is to loan money. They want to loan money at a profitable rate. And we have segments of society who want to borrow money at a reasonable rate. This bill seeks to aid that process. It's not quite as straightforward as it may sound. I think Senator Drake, again, I think she made this point that, or I'm going to expand on it, that really the first segment who will benefit from this are people who are already very good credit risks. So people who have money, they've got a good education, they've got collateral, they've got a good support network, they've got documented revenues. The people around the margins who already get money will really benefit from this kind of a bill. They're documented, they don't operate in cash, so on and so forth. But I'm going to come back to that. But even if it were just that, that would be a strong reason to support this bill. But sir, the second point, and we kind of talked about this, walked around it, I think, in the debate so far, is the regulation necessary? Several senators have talked about the feeling that one's privacy is being infringed upon. I have to submit income, data if I apply for a loan. I mean, that's going to be done automatically, and so on and so forth. Now, part of me wants to say that this is the price you pay if you want to provide comfort to the lender that he's going to get his money back, that you are going to, you are a good risk to take a loan on. But I got to say, a very strong part of me wonders about the protections around that data and how it's stored. Now, Senator Holder talked about how long it's taken, or she didn't phrase it that way, but the length of time this has been consulted upon and the length of time it took to get here. One of the reasons it took quite a long time was because they were looking to dovetail the Data Protection Act's requirements into this bill so that those protections would be present. So I read this bill in that knowledge, knowing that on paper, the provisions of the Data Protection Act really are extended into this bill. But I think everybody knows, and Senator Wiggins did give an example, that data breaches happen. And there's a very well-known one with a credit bureau, Equifax. I do not remember how long ago this was. They've had repeated breaches of data being stolen on subjects. So on paper, we have a very tight bill, and there are provisions in here that request that the central bank reserves the right to inspect security provisions, the IT, and so on and so forth around this. That strikes me as really critical. It's one thing to put it on paper, and it's another thing to make sure that it's carried out in practice. And you're talking about a group, a credit bureau or a series of credit bureaus that they're of greatest effectiveness if they can exploit what are known as network effects. So basically a network effect, Facebook might be a good example here. If only 10 people are using it, it has no great value. If millions and millions of people are using it, or hundreds of thousands, then it's very, very valuable. So sir, if you do not have a lot of what are called in the bill credit information providers submitting the data, you're going to have gaps in how effective risk is actually being measured. And it'll be difficult for banks to price the loans that they lend out. Sir? People are generally going to be very hesitant to provide personal information or to give their consent to it unless they see there's a concrete benefit. I think, well, I know, I'm not sure if everybody else knows, but IT systems generally, for most firms, are not strong on cybersecurity. Now, Senator Wiggins made a point about setting up a separate unit. I mean, she talked about oversight, but I think it goes a little bit beyond that. I don't know if the central bank has the resources, first of all, to provide regulatory oversight, and second of all, if it's skilled enough, every time it grants, it mandates that such and such a credit information provider must provide its transactional data to this credit bureau. If it can truly satisfy itself that that group or entity has the means to protect that data. And I thought Senator Holder's point about the fines was a very good one. $50,000, I think it pales in comparison to the value of some of the data we're talking about. So the bill covers that, but now, as I say, the proof of the pudding is really in the eating. So I'm supportive of the bill, but those things do strike me as very important. So if I could just return a moment to the negative attitude towards the banks and this idea of being blacklisted. Credit bureaus have their origin in a very negative reason. They are originally set up to identify people who did not pay their debts. And I think this is why we have this suspicion of being mistakenly put on a credit bureau and being misassessed. Now, although that is a negative origin, the fact that, and I might add, the origins of credit bureaus stretch all the way back to the 18th century, but the first one in Barbados was set up for the very first reason, for the very same reason. It was designed to stop organized bad checks being passed to merchants here. It's in the early 1990s. So it's a common thread that lenders actively seek to protect themselves and their risk attached to their loans. And it's not just loans, it could be checks, as in that example. But over time, a second reason appeared, for credit bureaus to justify their existence. And this really was the flip side. More and more credit bureaus started to appear in order to produce lists of people who are good credit risks. Now, sir, this is something going back to 250 odd years, so this is not all about quantitative analysis and did this person pay back on time and so on. These credit bureaus, right up until fairly recently, actively sought to pad out these lists so they could turn around and sell the information. Now, we've spoken about how sensitive people are to this kind of information. If you have a traffic in that kind of data, and there's a provision in this bill that I think speaks to that when they say you can hold on to a data subject's data for up to 7 years provided it's for research or statistical purposes, and also provided the data is anonymized. You cannot, and that's in accordance with the Data Protection Act, you cannot leave a way that that data could be parsed such that the individual components of it can be identified, can have a name actually put to them. Sir, if you have that kind of functionality set up in a credit bureau that it's going to analyze data potentially to sell it, and I'll speak about this particular credit bureau in a few minutes. If you do not have regulation around it, governing it, it is a cause for, it's a recipe for disaster, and history, in fact, shows us that very, very clearly. Before quantitative analysis, the types of data that were accumulated were all qualitative and subjective in many cases, and they tended to be inaccurate, unverifiable, and generally capable of causing great harm to the data subject themselves. There are even cases, sir, where employees of credit bureau would go to one's neighbor, and I'm going to channel Senator Springer here for a moment, and they might go and they say, well, you know, Reginald Farley, you know, how many girlfriends does he have? You know, he's buying them a lot of gifts, right? And I'm sure you would pass that. I'm sure you would pass that test, those series of questions, admirably, sir, provided you had good relations with your neighbor, right? You know, this kind of information was used, was marketed. You cannot run a credit assessment of somebody that way. You have to get away from that. And that's not as far-fetched in some other jurisdiction as it might seem. This same criticism I saw spoke about, implied that a credit bureau score would do away with the friendly loans officer who was very empathetic and would understand if, you know, you had to be in hospital, you missed your paycheck. And well, that's a very romantic notion, sir, and you might indeed have some loan officers like that. But I think you're equally likely to have loan officers who say, that doesn't surprise me, the man drinks, you know, he does this, he does that. You cannot have a system that's based on establishing the risk of repayment that way. Now, it's been said a few times in here, but I'll just underline again that banks want to lend money. Providing this information enables them to lend money at keener rates of interest than they otherwise would be able to. So this bill, if passed, represents one way to expand credit to the real sector, and I'll say unfortunately also possibly to the consumer loan sector, be it cars, holidays, shopping trips, all the things that Senator Drakes was lamenting earlier. Now, I would hate to suggest that this is a magic wand. That's why I thought it was very important up front to say that those people who are already considered pretty good risks and the people who are just at the margins of that qualification, they will benefit first. With this very same wariness of providing data that could be kept for 7 years, it's also a way to create competition amongst credit bureaus to serve segments that are, in the jargon, are considered credit invisibles, people who operate in cash. You know, a couple of weeks ago, we spoke about the vending bill and formalizing that economic activity. I don't know the numbers, but it would surprise me if there are a great many vendors who formally have loans with credit providers. And it strikes me that equally that it is a sector that could be ripe for that kind of loan. They're effectively in distribution and sales, operating on a small scale. Someone somewhere doing that might think, well, if I had a loan for $5,000, I would do X, Y, and Z actually to expand. And there are other areas in the informal economy which is not a joke. So the informal economy is estimated to be about $3 billion in value, and that's $3 billion that's not captured in our formal GDP measure. And that's IDB data, that's not my feeling or something. $3 billion, and we also know that cash in the economy is about 8% of GDP. There's a lot of money in cash, there's a lot of money in the informal economy. I would suggest that credit bureau data, analyzed correctly, can create new ways of measuring risk for that sector. At the moment, it deals in a very traditional approach. Guy has a job, he has a salary, he has a mortgage, he has a house. It doesn't deal with what's popularly called the gig economy, whether that's an individual or somebody who has a business name, maybe at Kaiko, and is doing a lot of informal work. There are a couple of examples of innovative credit bureaus in other jurisdictions who are trying to create those kind of credit scores to tap into that market. Because this is just Barbados, and Barbados is a small economy, and yet it has an informal economy estimated at 30% of recognized GDP. That is the same for the entire region. So the person who comes up with a way to measure that data such that they can expand this way of calculating risk and pricing the loan appropriately, it has a great deal of motivation to do so. So before I leave that subject, I thought Senator Drake's made actually several very, very interesting comments, and one of them was about predatory lending. So today we have commercial banks who focus on high quality risk. Those same people I spoke about before. We have some people who are balancing and juggling their debts. I was surprised to find out, but I know of cases who will balance money between a credit card, a credit union, and a peer-to-peer lender called Carry Lend, who many will be familiar with. That's not going to be captured instantaneously by this kind of credit bureau information. But there's another sector of consumer lending in particular that I call predatory lending, where they'll, just this week I saw an advertisement in the newspaper touting, and this speaks to the financial education aspect. I'm not sure if that was Senator Wiggins or someone else, touting a teaser rate of 1.5% a month. That's 18% a year. Sir, if you could, I'm sure as a financial professional, if you could find an instrument in which to deposit your money at 18% a year, you double your money in 4 years. Okay? And if you're demanding someone repay, especially small amounts, at that, and by the way, that is the teaser rate. I actually know categorically of a case where the rate is 34%. For a 2-year loan, $2,000. 34%, and it's apparently not the lowest you can find. Sir, I'm not going to make well, I guess I am making a moral judgment on it, but that is not the focus of my attack today. I think the focus here is that same credit bureau data, if used to enter that market, would bring down rates. If someone came up with a way to talk to that very segment who, for whatever reason, feels the need to go and borrow relatively small amounts at high rates of interest, that data in the hands of a potential competitor could break that market open. So we haven't had a usury act in this country, I think, since 1970. And when that was repealed, it was because it felt that the cap, which was 8%, and originally I think it had been 6%, was choking credit. And I think that was true. I think we do not need a usury act. I'm not sure I do not agree, in fact, with Senator Drake's implication that we have to have a lot more regulation on is a such and such rate of interest ethical or not. I do believe the answer is in facilitating competition to go into these niches where we have clearly a large opportunity, a $3 billion opportunity, or in the case of predatory lending, I don't know how big that market is, but if I see someone is lending at 34%, I'm fairly sure I could be motivated to invest at less than half of that, if needs be. I just need to understand how to measure the risk. So this bill, as intrusive as it might seem, represents the potential to have those tools available to promote competition and to attack things like predatory lending for the benefit of the whole country. So a point was made, and this is important also, about credit scores going up and down. So there's this fear again that this data is going to be used against one. But there's recourse in this bill if your credit is damaged to rebuild it. You should not be afraid of that. You know, that's something that you have in your power to control. It's not with some loan officer who might or might not be sympathetic because you missed work, because you had whatever happened. It's in one's own power to take command of. So, sir, I'm supportive of this bill. There's one other item that I think I missed the initial part of it because I was out of the room, that Senator Holder spoke to, and that was around ownership. Data of this type is extremely valuable. Now, this bill has provisions that prevent credit information providers from owning more than 5% of a credit bureau. And in aggregate, it also has a control that all credit information providers together cannot own more than 49%. Now, there's a very good reason for this. It's so that you do not distort the competitive playing field for people who are providing credit. You do not want to give one player a comprehensive view of any given demographic segment. You know, how they pay, how frequently they pay, what's their level of exposure. With that, they can do what, and this is an interesting analogy to me, what is happening with Amazon all over the world, in fact, but primarily the United States. Amazon has started to offer more and more credit to its MSMEs who are on the platform. Now, that might sound like a great thing, but that gets back to the asymmetric information that Senator Holder spoke about. One side in the negotiation knows everything, and the other doesn't know that much. One side knows the state of your receivables, how often you pay, how many customers you have, and so on and so forth. That's the kind of situation that I believe should be regulated. You cannot have one player owning that kind of data and having that kind of power. So, sir, in this case, I think those ownership restrictions are extremely wise, but I do have a fear. These same, what I call predatory lenders, and they're not alone in this, they're actually unregulated entities. They're not captured as credit information providers. Now, the central bank has the power to designate them as such. At the moment, the credit information providers are only banks or financial institutions regulated under the Financial Institutions Act, insurance companies and credit unions. But our financial situation, market, if you like, is much more sophisticated than that. You have players who specialize in payments. This kind of data should encourage people who specialize in very specific types of lending, perhaps digital lending. Although the bill can be interpreted to capture some of those, except I think the payment specialists, it's the application that concerns me, and it's something I would look at pretty carefully as a regulator, and I say that for a very specific reason. So the credit union, the credit bureau, I beg your pardon, that's been set up to pilot by the banks. Effectively, it's a company, it's an Icelandic company, and I think the pilot began in 2018 or 2019. This company has credit bureau as a platform service. And they actually have 33 credit bureaus around the globe, many of them in developing markets like our own. Now, after they came here, after this pilot began, a controlling interest, 53.04%, was bought in the credit bureau and its equivalents in Jamaica and in Guyana. And it was bought by a very large payment specialist, or originally a payment specialist from Brazil. It's a company that's quoted on one of the major US stock exchanges. It has, if you know Warren Buffett, he's a major investor in it. Now, I'm not saying they're going to do this, but they're a payment specialist. They have a controlling interest in this company now. I'm not quite sure what the details of the pilot the bank has negotiated with the credit bureau are, but you have a potential situation where everybody is giving their data to this payment specialist. I know the bill can be interpreted to protect against that. It's not clear to me that that would apply specific to a payments company. They do not operate here at the moment, but I would suggest their intent is fairly clear. And it's something to watch for in particular, and I do hope the regulators are aware of it. So, sir, in closing, I think this is a good bill. I don't think it's going to have massive immediate impact, but it is a step in the right direction, especially if the data is protected and used properly. If we can encourage other specialist lenders to come in and attack those very choke points that we have that hurt people, it is, to use that cliche, transformational. I thank you, sir.
Thank you very much, Senator Adams. Senator Walcott.
Mr. President, I'd like to move that this sitting be suspended until 2:30 for lunch. Thank you.
The question is that this sitting be suspended until 2:30 p.m. today. Honourable senators in favor, please say aye. Aye. Those against, please say no. Methinks the ayes have it. This sitting is now suspended until 2:30 p.m.